Some people will do absolutely anything to try and gain an edge in the stock market. My guest today spends his time disguised as a homeless person, sifting his way through the rubbish of Fortune 500 CEOs, trying to find their brokerage statements, trying to find out what these insiders do with their own investment capital. At least that's how I imagine it. Brian Christopher, thanks very much for joining us. Have I got it right?
Yes, something like that, Nick. As you were speaking, it reminded me of the 1987, I believe, movie Wall Street with Gordon Gekko and Bud Fox, who was played by Charlie Sheen. He was doing that exact same thing, trying to go around town and gather insider information that they could trade on.
But that's not quite what you do. So can you give us, just a broad overview of what you do instead?
Yes, for sure. Well, like to start off, insider information is non-public information, really, and many times when we hear about this, it's in a bad or a nefarious headline, people getting in trouble. Some examples include if your friend works at an investment bank and tells you about an upcoming deal that isn't public yet, and you trade on it. That's insider trading. That's a bad thing. That's not something that you should do. And so, but we are able. So the governing bodies of various countries. My focus is often on the U.S. and also the U.K. They developed rules to oversee insider trading activity, and we can actually monitor that activity, and that's what I do.
Yeah, so we're walking on eggshells here because if I get my wording wrong, I could be in trouble. So there's insider trading, there's insider information, but then there's also what I think is called insider dealing. So when there is someone who's in a position of knowledge about knowing something that is not public information, and they decide to make an investment, that has to be recorded and is public information, correct?
Yes, it has to be recorded it has to be reported to the governing body within a specific time period. That information is then actually provided to the public, and so they can see what's happening. So it's a little bit less of a black box, and that allows us. If you think about it, following insider transactions, what the CEO of some small company buys. Most people don't care about that. It's a lot of minutia, but that's the great part, because we can follow it and we can benefit up from it if we see a situation or a setup that we like.
Yeah, I think you're wrong. I think people do care about it. I think they're too lazy to do what you do, which is do the digging in the internet, in all of the places that this information is deposited.
I think that's right. Overall, that's like a big part of the service that we try to provide, where we sift through all this stuff every day. We look at every trade in some form, whether it be our system looking at it or just like me looking at it individually or an analyst. But I love it because this opportunity exists because of like maybe the laziness.
Yeah, we'll get to the service and what you actually do with your subscribers in a moment. First, though, I wanted to discuss the context because I find it immensely entertaining what's been going on in this field of insider dealing, insider trading, the illegal part, what's legal, what's not, who's getting caught out doing things that may or may not be illegal. And there's three big topics that have hit the news cycle. You're not involved in any of the three, I'm happy to say, but the first one I want to cover is the one that I found the most amusing, which is the Federal Reserve. There were several people involved in the Federal Reserve, the central bank of the US, who were doing some personal dealing.
That's right. So we've had several people who have actually either retired or stepped down from the Federal Reserve as a result of, or in a case that has been linked to some questionable trades in terms of the timing of the trade versus which sure looks like it could have been related to some of their insider knowledge about some of the Federal Reserve activities that were going to take place.
Yeah, what I find fascinating about this is that these are the policymakers. So they're not just sort of reacting to I know their company's results, which, they, as the CEO, could influence, but it's sort of a reaction to the economy, to the market. These are policy makers making decisions that impact financial markets, and also doing some trades that were opportune or suspicious,
That's
however you
right.
want.
That's right. Now the Fed. So Jerome Powell, the chairman of the Federal Reserve, has stated that they have created a new trading policy that will limit this activity severely, and that's a good thing, and it should have been in place a while ago. The interesting thing is we've also seen some of this activity in the U.S. Congress, right? And they don't have a plan yet.
Yeah, so I want to show on the screens this chart, which shows how various members of the American Congress, effectively the American Parliament, have performed in their own personal investments. And let's just say that some of them have been again suspiciously successful. But the big story in the US has been that there is a resistance to this fact that, again, policymakers are making decisions that are imposed on financial markets, are able to invest their own money with knowledge of what they have planned for those policies. So can you tell us about what's going on in Congress right now about this attempt to limit the stock trading ability of members of Congress?
Well, as more stories came out about some of these large gains that Congress people were recognizing, there were expectations of who's going to step up, who's going to create a policy, kind of like the Fed has created to help avoid this. And in mid-December, House Speaker Nancy Pelosi spoke to Congress and said, "This is a free market. We're a free market economy. They should be able to participate in that." And by they meant members of Congress should be able to trade stocks, I guess, basically as they please. This, to some extent, it wasn't surprising because Speaker Pelosi's husband is a very successful investor, and so therefore, on her accounts, when she reports information about her trades, and it includes his trades, and he's done well, especially in the last decade. But the response to the concept of being so, I mean, I think you could say out of touch with everybody. I mean, these aren't Congress isn't, they're not regular people, right? Like, these people that create the rules and have an intimate knowledge of which stocks that this could affect, which industries could be affected based on the rules, based on the laws that they're creating. And now, subsequently, there have the Speaker Pelosi spoke in January and said that they are working on a new policy. Again, kind of like the Fed, but I, who knows? Who knows how long it'll take them to create this? It's not something that serves them, and sometimes, unfortunately, when you write the rules and you're human, you don't really want to write a rule or create a rule that adversely affects you.
Yeah, before we move on to the third example, which is going to wipe the smile off my face anyway, I want to ask you about whether this shift at the Fed and in Congress suggests that there's a bear market coming. The logic being that these people are giving up the opportunity to invest as they have been. They happen to have done so in the case of the Fed just before stocks have been correcting quite rapidly. Is there something there?
Uh, maybe tangentially. We'll see. Maybe the concept where I speak to the concept of Congress. How long is it going to take them to actually create this rule and put it in place? I wouldn't be surprised if it's like until the end of the year. But if we see that it's only a few months, then there might be something there might be something to that.
It does seem to me that some of those Federal Reserve policymakers got away with it. They managed to sell out just in time, just when their monetary policy decisions started impacting the stock market. Let's move on to the example that is a bit awkward, which is Moderna. This is one of the vaccine producing companies. There's a bit of a conspiracy theory even or flavor, conspiracy theory flavor to this. And there's been a lot of stories. There's been some absolutely excellent analysis of this by Louis Gave, I think his name is, from Gave Carl. And he was pointing out that the Moderna share price seems to have anticipated how poorly the vaccines have performed against Omicron specifically. That the correction in the Moderna share price, the timing of that correction, and these are my words, this is my understanding of what he's written, that the Moderna share price correction happened much earlier than you would expect, given the fact that we still need a lot of Moderna vaccines because of Omicron, possibly a whole bunch of boosters, and it's been falling instead, suggesting that the vaccines or the stock market knew that the vaccines wouldn't be as effective as politicians basically believe. That's his idea, as I understand it. But the more interesting side is the one that you are aware of, which is the insider dealing, the dealing of some of the board members and managerial staff in Moderna, and what they've been up to with their shares.
Well, I think from I guess a conspiracy theory standpoint, if you look at a chart, I've got a chart here which shows you the insider buying, which is really not existent, with the exception of one example, and insider selling, which is very existent because, for example, the CEO of Moderna, he sold at least 9,000 shares every week since the 1st of November 2019. So in those sales, he pocketed more than $200 million of proceeds, and he actually continues to sell. He wasn't the only one at the firm who was selling, and with the exception of one purchase in February 2020, no one reached into their pocket to buy more shares, even as they moved up above $400. Now, it's true. I mean, he sold the shares, but he still owns a whole lot of them, and he was an early investor and basically invested in every round when they were private, and he was the only one that did so. And so he's actually selling under a plan that the SEC has called a 10b5 plan, which actually results in automatic sales. So it's a bit of a he still owns 5.7 million shares of the company, and to some extent in this example, it's like wait, is the question, should he be selling these shares, or is the question, man, like, what do we have excessive compensation?
Yeah, I think your work actually dispels the conspiracy theory. But first, why didn't you tell me about that February 2020 purchase when it happened at the time? If you look at the share price after that particular well, anyway, that's a great example of it. But
well, yeah, that is what we endeavor to do. We do we do look for those, especially the the lone candidates, or we might see some examples of where you might have like an individual insider who has purchased shares at one point, and then you saw there's, or whose purchases coincide with a subsequent increase in the share price, and that's happened more than once. So it's a great example, that February 2021.
Yeah, they've got a track record is what you're looking for. The reason I say that your analysis suggests, or actually dispels, the conspiracy is because you focus solely on the buying decision in your newsletter, which is called Follow the Money. And we'll get to why that is. But what I find interesting about that is that it's very normal for insiders to be selling shares. And you don't, I think, see that as much of a signal. Well, you can explain why you see it that way.
There's a couple reasons. One, selfishly, insider selling is much more common than insider buying, and I say that tongue in cheek. We've got systems to help us monitor every trade, but in fact, back in March of 2021, insiders sold $9 billion of shares, and they only bought 600 million. So it was a ratio of 15 to 1 sells to buys. Now in uh, January of this year, that ratio went down to 5.5 to 1 sells to buys, and the relationship is not linear. The stocks sells versus buys will fluctuate as share prices do, and as but so on one hand, where I say tongue in cheek, it's the buys are, to me, they indicate a little bit more because they're just less common, and like, to me, that's also logical, because we know that insiders sell stock for a variety of reasons, and yes, it's possible that they believe it's at a temporary high, but more often they just need the money for something, like to make an investment, or they might want to diversify their portfolio. In the case of Moderna, the CEO was in an interview. He said he had 99% of his net wealth in Moderna. So actually, for him, it would make sense to sell some stock and buy something in an unrelated industry. People might be buying a house. They might be going on a vacation. They might have to fund college. So there's lots of reasons to sell shares, but like, logically and just from a human perspective, when you reach into your pocket to buy shares, I mean, you generally believe that the stock's going to rise in price, at least in the majority of cases.
Yeah, one way to think about it is that these people are already overexposed to that company, so selling their job and 99% of their wealth in some cases. So selling, especially if it's under this plan of automatic selling, is a logical and normal thing to do. Let's focus on follow the money and how your service really works functionally. And I guess you've given the why it works, but how do you go about searching? How do you go about notifying subscribers of I guess there's an alert, or how does it all work?
So, I mean, it starts with the insider activity specifically. I've got Bloomberg and other systems that I use to track those individual trades, and then once we observe those trades, then we will actually um, whittle that list down, and then we'll do more in-depth analysis in those names. And that analysis would include evaluating the financial strength of the company, and as well as the momentum of the shares. That's one of the things that we have today that is a little bit less frequent, where we've got the market kind of drifting downward a little bit. But we're going to look at those three filters, which includes the insider buying, the financial strength, and evaluating the momentum of the stock, and if there's a catalyst on the horizon. And then once we sift through those, we've got the systems that provide some ideas, and then I finally make a decision as to which stock or stocks we actually want to own, and then we would send that out to subscribers in the form of a buy alert, and that alert would include information about the analysis that we've done, kind of an abbreviated version of it, with links to source material and other things that people can actually look at on their own, and then very very specific buy guidance in terms of a buy up to price, and kind of what our expectations are for the stock. We also highlight the risks, because every investment has it, but in some of these cases, if you have a stock that's been sold off, it definitely looks a little bit more risky, or vice versa. If it's a high flyer, we need to identify what the potential downfalls, what the potential negatives are with respect to not achieving our thesis. So it's pretty, the process itself is very wide ranging. It's very all inclusive, and then we try to get the reader a more understandable um, analysis and rationale for buying the stock.
Yeah, and subscribers receive a report where you outline this. It's called My Three-Stage Stock Filter: The Smart Way to Shoot for Rapid Stock Market Gains. In that report, something that jumped out at me, apart from those three filters that you've just mentioned, which explains, the report explains those. You only look at stocks, or you focus at least on stocks, where directors, officers, and those who own 10% or more of a stock. So What's the secret behind that?
That I probably should have identified that earlier. That is the SEC in the U.S. The governing body in the U.S. is the SEC, the Securities and Exchange Commission. That is their definition of a company insider. So it's a person who serves on the board, person who's an officer, chief executive officer, chief financial officer, COO, as well as people or entities that own 10% or more of shares. Those groups are required to report their activity, and those are the groups whose trading activity we can follow with our systems.
What triggers a sell alert for follow the money? Is it when that same insider who triggered the initial screening processes alert, when they sell, or what's the process that you look at?
It's so when we create a buy recommendation, we establish an initial price target, and that target's based on lots of variables, multiples, historical activity, and when the stock gets to that level, we will reassess the position at this moment. Would we want to buy more? And what is the anticipated upside based on the multiples that it's now trading at? And so we could sell when we reach our target, but it just depends on that kind of next stage analysis. Also, we maintain stops, and so if the stock moves in the wrong direction, the sell could be a result of falling below our stop price.
One of the things that really strikes me about follow the money is it's the perfect sort of system or idea for a newsletter. The reason I say that is that if every investor spent their time trying to track insider buying, that would be a huge amount of work done by a huge amount of people, which is not much fun, apart from some of us think it's fun. And what you've done is you've said, hey, I'm going to do that work, and I'm going to give you the result of that work. And you're able to share that with this group of people, and it's an example of specialization. Do you find that's working well, that idea, or have I got the right understanding of what makes this work?
Yes, you're right. I mean, no matter what your methodology is for picking an investment, picking a stock, whether it's straight value or momentum or whatever it is, you develop proficiency, I guess, in turn, once you, especially after you've done it for a while. And I don't look for stocks without first looking for their insider buying activity anymore. And so I found it to be very useful. I found it to be very successful in many cases. And really, I just want to bring like the best ideas that I can to subscribers. The other thing that I've noted is that you're not going to recommend 90% of the names that you analyze, maybe 95, but then some of that process, the analysis of the industry that the company's in, because I'm industry agnostic. I don't care what sector it's in. If it fits the criteria and looks like it's going to go up and make money, I'm good with that. But then, so many times there are reasons why you're not going to recommend it, and so that just gives you that just expands your watch list for, if this happens, then we have this next idea that we can invest in. And sometimes if that happens can take 6 months, it can take a year. It can take a while, and actually we can see that sometimes with the actual recommendations that we make, because just because somebody buys a stock right now, it doesn't mean that, it's in anticipate. Let's say a CEO buys a stock and it's anticipation of a new investment program that they have. Well, that can take several months to both to be executed, as well as for them to provide the information to the street and the stock to go up. And that's why we incorporate the momentum aspect in our criteria, in our filter system. But sometimes we do have to wait a little bit longer than we had hoped. But it's basically like it's not that you're waiting for something that is going to happen, but it's a nice setup, and it sure looks like this is going to happen. So this is actually more inevitable maybe than it is imminent sometimes.
Yeah, it's not always February of 2020 with a vaccine maker shortly before a pandemic. Uh, well, look, Brian, I'm relieved that you don't spend your time dressed as a homeless person searching through people's rubbish. That it is a bit more sophisticated and careful than that. To everyone watching at home, if this sounds like something you're interested in, then depending on when exactly you're watching this, there might be a link below to try and find out more about Follow the Money and Brian Christopher. Brian, thanks very much for joining us, and to everyone at home, thanks for watching.
Hey, thank you, Nick.